everyone, this is Patrick from EasyFX Code Trading System, and it is Saturday, the 11th of June, 2022. And this is the weekly technical analysis for spot gold, dollar yen for the third week of June. And let's begin with the precious metal here. And Friday is a very bullish candle here. That's right after the US CPI figure was released, where initially it was dipping lower, but found support right at the 21 FIB retracement back up, and after that bounced and broke through all the resistance back up to the daily 55 EMA. That's where it closed around that for the week, and back into the resistance zone past the 38 FIB retracement. So the US CPI figure came out hotter than expected, and this helped the US dollar against the majors, but for spot gold, it turned out that it's being bought and being bid as an inflation hedge, because the inflation seems to be running too hot for the US economy and does not seem to be slowing down. And this would likely be putting more pressure on the Federal Reserve, which is expected to raise interest rate this coming meeting on Wednesday. Where the FOMC is expected to increase rates by 50 basis points from currently 1% to 1.5%. And that could put pressure for the subsequent increases of supposedly 50 basis points for the next 2 months thereafter. And they could be considering even increasing at a higher rate, but we'll see what the announcement and decisions are on Wednesday. So spot gold is now also back in the highlight after being stuck in this consolidation range for a couple of weeks, and now it could be threatening to break out higher through this swing high area and right up to the 1900 level, key round figure level, and just above the 50 FIB retracement. So that would be the next key resistance zone. Support was validated with a bounce from that area. So let's take a quick look on the shorter time frame on the 4-hour, and that's where, let's go down to the 1 hour. So news broke at 8:30 Eastern, 8:30 US Eastern. So this will be inside this candle here. In this candles area. And form a large spinning top candle. Another spinning top after that, after another hour. But then right after that, at the start of the 10 o'clock, 10 p.m., 10 a.m. Eastern, that's at the 4-hour close of the spot gold. We'll take a look at that. There's still the 1 hour. That's where it managed to punch through and broke out higher from this Harami, and which it has been threatening to climb up higher after forming a couple of higher lows. Let's go to the 4-hour time frame, and that's the after the 4-hour close here with this lower wick, about half of the range, and that's where it flew past from this support area at the 21 fib retracement area. Let me draw this this zone here, and it climbed back up to retest the highs of the previous week. But with a strong bullish close. Let's take a look on the that's the daily. Let's go take a look on the weekly time frame. And previous week was a spinning top as well, and that's the bullish bounce from the 21 fib, closing above the 38. So it's likely to find some bullish momentum next week to push it through into the 1900 resistance zone. Let's see if it's this, depending on the decisions and announcements on Wednesday, whether there's a possibility of even pushing it higher to the 62 fib retracement. But there's still lots of opportunities for next week with a number of US news coming up. But the key one will still be the Federal Reserve meeting. All right. Let's move back to the daily time frame. And we'll see there's been some cases where the US dollar and spot gold has been moving in tandem together as well. So we'll see that when we take a look at the US dollar index, the DXY. So here's the US dollar index, where you can see that from Thursday, it has pushed up higher through this intermediate resistance zone at the 162 fib extension. It has been climbing back up from the 138 since the previous week, and after finding support from the daily 55 EMA as well, and continued further fueled by the US CPI figure, and right into the resistance zone at 104. Close just above the 104, and this previous swing high level. So looks like there is possible bullish momentum to push it right into the next resistance zone at the 105 area. So this is definitely the next clear target. I'll mark this as a intermediate resistance for now, in case there's a pullback, but most likely that's going to be the new support level. This is definitely already a support. All right. It's also possibly a reversal dip here, and it has run up into the 78.6 fib retracement, and the next range will be into the 105. Beyond that, it's potentially looking at the 106.35 area, so just above 106. That could be the next. Perhaps I can move this zone into this next resistance zone. And possibly move this into support level at the 50 fib. All right. So although it's the US dollar is strengthening, it's at the expense of US economy heating up, having a runaway inflation now. It doesn't seem to be slowing down. So the Fed is will be pressured to take even faster and more decisive actions. All right, let's move back to the other majors. Let's move on to the dollar against the Japanese yen, where it has also flew past the resistance, past this swing high, previous recent high, at the 131, and through 133, and approaching 135 here. So this is a significant weakness for the Japanese yen now. If we take a look at the weekly time frame, it's a very strong bullish candle following last week's bullish move as well. So it does not seem to have any opportunity for the Japanese yen to recover. So apart from this previous 3 weeks here, where it did manage to pull back to find some support from the 127, but since then that has already rallied through to over 750 pips and heading into 800 pips. So next week there is a potential of it pushing up even higher, approaching the 138 fib extension, and previous swing highs here as well. Yeah, that's the highs from 2000, so that's over 20 years, 22 years now. The BOJ does have a policy meeting coming up at the end of the week, but all eyes were still going to be on the Federal Reserve and their decisions. Let's move back down to the daily. This is definitely going to be support zone now. Let's move this out. So let's leave this down here now, move it up slightly. But so right up here, the 138, that's going to be the resistance zone. Very critical one. We could also add a reversal fib. Let's change this to lighter green here. And this reversal fib, price has already hit the 162 fib extension. So that's why it has paused over there. And, next week, we'll see if it's able to break through this 138 fib continuation move and back up to target the 200 fib extension of the reversal. Let's add this as the next potential resistance zone. That's at the 106 30 plus pips here. Yeah, 106 35 area. And potential support zone at the 133. Sorry, what I meant to say was this should be at the 136, 30 plus area. Okay, so strong bullish bounce and support from this 138 fib extension. So it should be providing some support and targeting this zone and beyond as well, possibly. Right, if it does pull back lower, there is definitely strong support at this swing high. That's at the 131.30 area. Right, but for now, the US dollar has moved back into a bullish phase again. So that's it's causing the risk off in the other markets, majors as well as the stock market. That's going to dampen their bullish move there. Okay, so do check out my other video on the majors on the euro, pound, and the Aussie dollar. Have a safe week and a good trading week, and cheers for now.